you're going to hear people saying, oh, Bitcoin's over, it's going to zero, no one wants it, it's never going to be. You have to be able to separate yourself and not get swept into that emotional aspect. I hope people that are listening and watching, like, if there's one lesson you take away from this, I mean, I still remember being in Dubai last year, and that's when I did live interviews from that summit where I was saying, we were at 66, 67,000, I think, at the time, and I was like, listen, guys, I think it's going to 20. And I was like, I was doing a panel at one point, and like the room got this crazy hush when I said that. They're like, oh, this guy's a nut job. But you're right. When everyone is so bullish, you need to be very self-controlling, meaning that you have to be able to control your emotions and not get swept up in that. And by the way, that goes for the same thing at the lows of cycles. Like when, let's say we go to 12,000, you're going to hear people saying, oh, Bitcoin's over, it's going to zero, no one wants it, it's never going to be. You have to be able to separate yourself and not get swept into that emotional aspect and be able to say, no, actually, this is a normal cycle. This is what cycles do. I'm not going to bet the farm on it, because you never want to bet everything you have on anything, but I'm going to start inching into maybe a longer term hold position, believing in the longer term thesis of a Bitcoin and being that digital gold, if you will. Yeah, so I mean, basically you had the flush out here. Gold, look at the resistance line, right? Pivot low here, down sloping trend lines, and you're getting a pullback right in that level. So charts are telling you that was coming. I think, honestly, I'm expecting a consolidation move and then a bigger move to the upside. But again, keep in mind that gold trades inverse to the dollar. Generally, crypto does as well. It's influenced by the DXY. And so if you look at the dollar, this is the daily chart of the dollar today. Look at that big green candle. So that's putting pressure. I'm actually impressed that crypto's holding up today in spite of that. But that's why gold is down today, because of that dollar pop on the back of the Fed. Well, the back of the jobs number, which influences the Fed. It would be consolidating, and kind of that would be the equivalent of a kind of a bullish consolidation over the last little bit.
Yeah.
Now, just out of curiosity, go zoom out a little bit and like connect that high from the 70s on the dollar, and then connect it to that secondary high, and you can see that the dollar technically broke out like a while ago, right? So if we do, so I think it's the 81 high, yeah, like that high right there, yeah. Connect it right through and drag it all the way down.
Damn it. I haven't been trading in weeks, okay? I'm a little rusty.
No, you're good.
Here, we'll just do this. So you want me to do this?
Yeah, so you could see that was actually the breakout going back. It was like in 2000, what was that, 2015 or so. And then look at the consolidation, and now you're getting the breakout right there. So yeah, that's, wow. Now, the scary thing about that is if the dollar, so we all know that at some point, the Fed is probably going to have to print again when we get into a crazy, nasty kind of depression environment. All I was going to say is that if the dollar is really going to rip higher, that's not a good sign for the world. No, because the dollar, even with all the printing of money, we're still the safest. At least the world views the dollar as the safest currency on a shitty block, right? So like you have the euros are getting printed, yens. I mean, everyone's printing. China's printing. So even though we've printed, we're still kind of on par with everyone else. We're still the reserve currency. So if the dollar is going to scream higher, it tells you that people are running to the safety of the dollar, which means things are not good. Crazy. I mean, they're not. So I only if the only time I play kind of the meme names for me is when they're really crazy. When they're like if they're up like 40% on the day. And Beyond kind of caught that same big move back when the meme stock. It was kind of considered a secondary meme stock actually back then. I mean, like as swing trades, I think Tesla's ridiculously overdone. I think that's going to come down. I mean, there's so many good, and it's actually getting smacked today. It's a big drop today, but yeah, there's just a lot of charts out there that have gotten way too. In fact, I'm short Apple right now. I mean, like heck, man, I'm like, look at some of these charts. It's just insane the moves that they've had recently. So yeah, so I'm always going to be a swing trader, so that's important to kind of recognize. So I'll be in and out, as a trader. But when we got to 19,000, and you do remember correctly, I love the memory. I started what I consider to be a hodl position on Bitcoin, and the way I did it was I basically said, okay, how much am I willing to hold? So I think that, by the way, any trader, any investor should always decide ahead of time versus in the midst of a trade when emotion is strong, like how much they're going to invest in anything. So, for let's just say $1 million, like I'm willing to have a hodl position of $1 million on Bitcoin. What I did was I divided into segments. So I divided it into sixth of a position, 1/6, 1/6, 1/6, and I invested that amount, that 1/6 at 19,000. So that I'm going to leave there. If it goes down another 2,000 to 3,000 below 19, I'm going to do another 1/6, then 2,000 or 3,000 below another 1/6. The idea is I'm not good enough to predict exactly where the bottom is in. Heck, maybe the bottom's in already. I don't know. But down in this lower range in the teens, maybe down to 10, I want to be just accumulating. So yes, in a matter of speaking, I'm not buying everything I can, but I certainly am starting that process very slowly to accumulate. Good, man. That's what people want to know, and I appreciate you asking the question, because I think it's important to know, even though I say it's going to 12, 13,000, frankly, I don't know, and I'm self-aware enough to know that I don't know, right?
Yeah.
So I don't want to look back and be like, dang, Bitcoin's at 500,000. But what about you, man? I want to hear from you. So give me where's Bitcoin going in the next month? Where's it going? Like, number one, I respect all your analysis. You're dead on most of the time, and so and I think it's important, even and I think you do this too, is like it's good to pay attention to other good people, because they might point something out that you miss in the charts. None of us are infallible. Yeah, so basically, I got approached by the Better Traders and by Kitco to kind of put together a hardcore course, 3-course series on everything I do, soup to nuts. The market psychological analysis I do, the discipline that I employ to keep my trades in alignment and to keep myself from chasing, and then basically all the setups I look for in the charts, all the proprietary techniques. There's stuff I've created over the 20 years that it works better than anything out there in the market, and I basically did it. It's 20 hours of content, and I'll show my screen here because it's pretty darn cool here. But let's go to verified investing education, the Winning Trader series. So, and I appreciate you letting me just talk about this, but basically it's a 3-course series, 20 hours of content, about 20 hours. In addition, there's 8, if you buy the bundle, which is the 3-course bundle, there's 18 hours included where it's a live education that I do. So like, people will take a course and then we do multiple hours of talking about it, question answering, and it's all live by me. So it's just awesome. But I appreciate you letting me just mention that. And if there's one thing I know, folks, is that there's no way I would be where I am today without learning how to read charts. And I think you would agree with that as well, is that it's really everything to be, especially in bear markets, we realize how little we know about things when the markets smoke us and do what they do. And so if you can profit, it's easy to profit in a bull market, but if the real test of a good investor and trader is, can you profit in a bear market?